And some people are speculating, well, is this an actual attack on the network? Now, if you were trying to attack the network, wouldn't you try and get control over the core team, the core developers, and try and see if you can attack that way? And so, that's the argument. You can pick what you want. Others, then they're saying that we'd like Bitcoin to be more than money. We'd like to be able to do these different types of NFTs and pictures and everything as well. But from my perspective, I think core is playing with fire. And I'm skeptical about that as well. And the right way to be in Bitcoin is to always be skeptical, because people can be compromised. And this is not an attack on someone's ethics or morals. People can be ransomed. People can be paid off. And so when I see things like, these types of shifts from changes of previous debates, this is I think there's a risk to this that doesn't really need to be taken. We can push everything else out to the alternative chains that want to play with these things. But I think it reduces the incentives for people to run these nodes if such a risk exists. Now, this may be very paranoid, but also, I'm not sure that this is, a risk worth taking. It's basically a theoretical, there could be a theoretical sharp drop in the decentralization, because the number of people that want to participate in running these nodes may theoretically have dropped, and this is what the block war debate was all about. It was maintaining, more expensive fees by keeping the block small so that more people could run nodes. And so it looks like the battle is returning. So even if only economic nodes matter, operators like individuals and teams and businesses, they basically could face some direct legal liability. And I'm not sure that we should do that. And so, many might decide that it's just not worth taking a risk. And I don't think it's a good thing to reduce the number of people that are going to be running nodes. And this is less, less decentralizing and more centralizing as a paranoid risk. Now, I don't think this is a major deal, but I just wanted to give my opinion on this. This is really also the maintaining of the ideological fight and an extension of what Bitcoin is and the previous block size war as well. And so people could say what their intention is, but maybe there's a covert operation. And I think we should always treat it that way. And that is the whole point of Bitcoin. Don't trust, verify. And so I see no problem of having these competing teams. And in my nodes, I think it's a good thing to run knots. Now, if you're not a node runner, you don't have to be involved in these things. But this one is really being called the spam wars, the node wars, or the core civil war between competing implementations of Bitcoin core code. And I think that's a good thing. I think that's very healthy. And so I've always wanted competing implementations between core, and now we have reputable competing implementations between core and not. So that it just means that it keeps one of the dev teams more honest if there is genuine competition with a competing dev team, and it keeps it more resilient. And so I think this is a really healthy thing. I think it's really good. And if one of the development teams, goes rogue, gets blackmailed, gets compromised, gets Mossaded, gets Epsteined, gets BlackRocked, gets axed, gets block streamed, and all of these different questions and conspiracy theories have, kind of gone through all the time, we've got alternatives. And I'm very skeptical about some of the behavior of some of the people and core developers. I'm speaking to you, Peter Todd. I've seen your support for nuclear warfare and Zionism, and all of the crazy things. And we also know that you don't even have, according to you, any Bitcoin. And so I'm a little bit skeptical about that. Now, it is a decentralized network. We don't get to choose. And Adam Back, a legend. He's always been he was named in the Satoshi white paper, part of the original cypherpunk movement. But when I see him pushing Bitcoin treasury companies and fiat currency financial weapons of mass destruction, and really pushing these different types of stablecoin implementations and treasury stocks, I'm not sure. And it's the whole point of this. Is he really cypherpunk? Does a cypherpunk push people into Bitcoin treasury companies over Bitcoin? Am I overreacting to that? Well, but the whole point here is that we need competing implementations, because that's how Bitcoin has always worked. Don't trust, verify, and treat everything with suspicion. And so everybody can be compromised. And so that's an important thing to remember. So that's my take on the whole thing. I will be running knots on my node. I think it's good for this type of competition. It's a healthy debate, but please don't confuse this as thinking that, this is chaos, because there were so many people during the block war debate that got out of Bitcoin because they just thought it was carnage as well. And so that's what I want you to remember. But also remember, just a reality check here. You can engage in the debate, but you're only really in the game if you run your own node.
Welcome to the Deep Dive. Picture this, a technology that promises complete financial freedom, where you, yes you, are your own bank. Sounds great, right?
It does. But that same technology is facing constant pressure, not just from, the big outside players, but also from these really subtle fights happening inside its own development community.
It's a really complex picture, high stakes everywhere, and it's shaping the future of money as we speak. So today, we're aiming to give you the fast track, like a personal AI summary of the key battles defining Bitcoin right now.
Exactly. Our mission is to cut through the noise, distill the essential points. We want to pull back the curtain on these nuanced struggles. You've got developers arguing about code.
Right. And then you've got Wall Street giants and even national governments making huge strategic moves.
And it seems like separate issues, but they're all deeply connected. They all touch on these fundamental questions of control, decentralization, and ultimately your financial independence.
For this quick summary, we're leaning heavily on insights from someone with tons of experience and often a pretty provocative take, Simon Dixon.
Yeah, his analysis, especially from his blog post, it was part 1 of Bitcoin Hard Talk, episode 96, called The Bitcoin Core versus Knots Civil War. It's really crucial here.
He's been in the financial sovereignty fight for years, so his perspective is, well, pretty key to understanding this whole landscape.
Okay, so let's dive into that first big area. The internal fights. Dixon calls it an internal civil war. Strong words. Reminds you of the block size war back in 2017.
So what's the core issue this time?
It's basically a clash between Bitcoin Core, which is the main software most people run, and an alternative called Knots. Knots is getting pretty popular, maybe around 17% adoption now.
Okay, Core versus Knots. And the fight is about?
It really boils down to data. How much data and what kind of data should be allowed inside a Bitcoin block?
Data limits. And this isn't just some abstract tech debate, is it? It has real-world consequences.
Oh, absolutely. Think about the big public mining companies like Marathon Digital. They're saying, hang on, if people start stuffing large amounts of arbitrary data, especially illegal stuff, into blocks, we're exposed.
Huge legal and reputational risks for them.
Exactly. Marathon even built something called Slipstream, specifically to avoid mining blocks with that kind of data. Imagine a bad actor intentionally putting illegal content in there. It's a massive attack vector. Regulators could jump on it, or just public opinion.
And Dixon points out that some core developers are apparently talking about raising the data filter limit significantly, maybe even removing it altogether. He calls that potential outcome toxic digital waste.
Yeah, it's a stark term, but it highlights how a seemingly small technical change could totally alter the risk for anyone running a node.
Right. So for you listening at home, maybe running your own node, why does this data filter matter so much?
It's all about plausible deniability. Right now, if large data gets put on chain, it's broken into tiny, 80-byte chunks. They're basically unidentifiable on their own. Your node isn't storing, a complete illegal picture. It's just got these tiny fragments.
Makes it incredibly hard to prosecute someone for hosting it.
Precisely. But if you increase that filter size or remove it, that plausible deniability could just evaporate. Suddenly, you could be legally on the hook for content you didn't even know was there.
Which could scare people off running nodes,
Right.
right? And that directly hits decentralization. It's a tricky balance.
And it feeds into this bigger ideological question. What is Bitcoin supposed to be? Just peer-to-peer cash or something more? Dixon actually sees having competing teams, like Core and Knots, as a good thing, a feature, not a bug.
Keeps everyone honest.
Yeah.
Makes the network tougher.
Yeah, more resilient, anti-fragile. He's expressed some skepticism about certain developers, mentioning Peter Todd's past ideas or Adam Back promoting Bitcoin treasury companies, questioning if that aligns with the original, cypherpunk vision.
So the core message for the listener here is,
It really comes back to don't trust, verify. If you want to really participate in Bitcoin's power, running your own node is key. It's about taking responsibility, checking your own transactions, and keeping the network decentralized, making sure it stays sovereign money.
okay, so while that internal debate is happening, there's this other massive battlefield. Wall Street. They're not just watching, are they?
Not at all. While developers argue Wall Street, or banksters as Dixon calls them, they are just accumulating Bitcoin like crazy. Public companies, through their treasuries, now hold over 1 million Bitcoin.
1 million. That's huge. How does it compare?
It's getting close to what Satoshi Nakamoto is estimated to hold. Think about it. Roughly 1 out of every 20 Bitcoin ever mined is now held by these public companies.
Wow. And we see big names moving in. Goldman Sachs has, what, nearly $500 million in exposure? Probably through ETFs.
Right. And that venture fund, Nakamoto, supposedly with deep state connections, talking about a $5 billion equity offering for Bitcoin, even like a French semiconductor firm raising $200 million for its treasury.
Seems like they're trying to package Bitcoin up,
Yeah.
make it part of their usual financial system.
That's exactly Dixon's point. He warns constantly about using the stock market for Bitcoin exposure because of key person risk.
Mean.
Not your keys, not your coins, basically. If you buy Bitcoin through an ETF or shares in a company holding Bitcoin, you don't hold the actual Bitcoin. You hold a claim, a derivative.
So if that company goes bankrupt or faces regulators?
Your Bitcoin could just be sold off, your self-sovereignty. Gone. You've put Wall Street right back in the middle, the very thing Bitcoin was supposed to get rid of.
Dixon calls this the Wall Street tier. Their game is control through ETFs, treasury companies, custody services,
Yeah.
making themselves essential again.
Yeah, inserting themselves as intermediaries, turning Bitcoin into just another asset in their debt-based financial complex.
But he also talks about the alternative, the sovereign tier.
Exactly. And that's your path, he argues. Holding your own Bitcoin. Self-custody. Hardware wallets, multi-sig setups. That makes you immune to the banksters.
It lets you, as he puts it, boycott the existing proof of weapons network, his term for the traditional financial system backed by, ultimately, military power.
Yeah. By holding your own keys, you're not feeding power to BlackRock. You're shielding yourself from unexpected crises, black swan events, and you're participating in a real circular economy outside their control.
And this massive institutional buying, it's not just about quarterly profits, is it?
No, Dixon sees it as strategic positioning. These huge Bitcoin stashes become leverage, bargaining chips in a world that's shifting, becoming more multipolar. These institutions want to be at the center of whatever comes next.
It's a power play. Okay, let's shift gears again. From Bitcoin's code and Wall Street plays to something new. Stablecoins hitting the Bitcoin network, specifically Tether, USDT.
Right. This is a potentially big deal. Tether is launching USDT directly on Bitcoin using something called RGB technology.
Okay, RGB. What does that mean for users?
It means you could hold digital dollars right next to your Bitcoin in the same wallet, potentially with better privacy features too. More convenience, more control. Imagine easily swapping between stable dollars and Bitcoin, maybe more privately, all in one place.
In RGB itself, it lets your wallet handle complex stuff like smart contracts and assets off the main Bitcoin chain, so it doesn't slow things down.
Pretty much. It's client-side validation. Now, Tether itself is still centralized, obviously, but putting it on Bitcoin via RGB, it's maybe a step towards having a stable value option that's closer to self-sovereignty, an easy way to get in and out of Bitcoin if you need to.
But innovation rarely goes unchallenged, especially in finance.
Definitely not. The big U.S. banks are apparently pushing back hard against this. Specifically, they're lobbying intensely to stop stablecoins from offering yield.
Yield? Like interest. Why are they so against that?
Dixon calls it a defense of the corrupt system they engineered. They're terrified of losing deposits. If stablecoins could offer decent yield, and Tether already earns massive yield on the treasury bonds backing USDT, why would people keep money in a traditional bank account?
they fear trillions could flow out.
Exactly. Tether, being fully reserved and earning yield, could be way more profitable than banks relying on fractional reserves. It hits their core business model.
So the fundamental question Dixon raises is, why do you need a banking license to earn yield on money that's fully backed and transparently solvent?
Right. He argues it exposes their reliance on a debt-based Ponzi scheme that benefits from inequality. Things like the Genius Act he mentions are examples of using regulation to protect their turf, to stay the gatekeepers of yield and stop you from benefiting from this new programmable money outside their system.
The critical fight for the future, then. Okay, we've covered internal code fights, Wall Street's moves, stablecoin battles. What about the bigger picture? Nation states.
This is where things get really interesting on a global scale. We're seeing countries starting to view Bitcoin as a strategic asset, maybe even a reserve asset.
Like national treasuries holding Bitcoin.
Potentially. Thailand and Japan are reportedly looking into it. Japan especially, given its history and its relationship with the US dollar. Dixon calls it vassalization. This would be a huge shift for them.
And some countries are already doing more than just looking, right?
Absolutely. Bhutan's been quietly mining Bitcoin using hydropower for years. Their goal is national sovereignty and, interestingly, focusing on a gross happiness index, not just GDP, trying to avoid that unequal K-shaped recovery thing.
And El Salvador, obviously, continues its Bitcoin strategy.
Yes. But the really big confirmation, maybe the most significant recent news, is the United Arab Emirates. The UAE is officially in the sovereign Bitcoin mining game.
Officially. How do we know?
Through Citadel Mining. It's a huge operation, and it's controlled by the Abu Dhabi royal family via their state investment company, IHC. Independent satellite analysis has even confirmed the scale of their mining operations.
Wow. That's massive. A major Middle Eastern power openly mining Bitcoin at scale.
It's huge. Based on what we know, the UAE might now be the 6th largest national holder of Bitcoin, more than El Salvador. It's a quiet but incredibly powerful shift in global finance. Nations looking for alternatives to traditional systems. And Dixon sources suggest other Middle Eastern nations are doing the same, buying Bitcoin quietly over the counter.
So, nations are moving. What about the market itself? Any signs of how it's handling all this?
Well, there was a fascinating example recently. Some single entity, a whale, dumped 24,000 Bitcoin onto the market.
24,000. That sounds like it should crash the price.
You'd think. But the impact was surprisingly small. The market just absorbed it, which shows incredible liquidity, right? Deeper order books, more buyers and sellers ready. It shows Bitcoin is maturing, capable of handling these huge flows. Healthy redistribution, maybe.
Interesting. Though Dixon also mentioned rumors about that dump. Something about Ethereum.
Yeah, rumors swirling that it might have been a coordinated institutional move. A pump and dump targeting Ethereum funded by selling Bitcoin. If true, it just highlights how sophisticated the big players are getting in this space.
Which makes you wonder, what does that mean for the average person? And speaking of institutional moves, the U.S. Commerce Secretary said GDP data will soon be issued on a blockchain.
Right. But the crucial question, as Dixon puts it, is which blockchain? Is it going to be Bitcoin immutable, censorship resistant? Or is it going to be some centralized permission chain, maybe an altcoin? A shitcoin casino, in his words?
The suspicion, based on who's pushing this, is probably the latter, isn't it? Fits with that BlackRock vision of a tokenized utopia where everything's on a blockchain.
Yeah.
Likely one they control.
Seems likely. And we're seeing other things, like the CFTC approving crypto prediction markets. Some see that as pushing towards gambling, blurring the lines between investing and just betting. A risky area for individuals.
And the Fed itself is holding a big conference soon, right? October 21st.
Yeah, on payment innovation. And they've explicitly listed Bitcoin, crypto, stablecoins, AI on the agenda. They're definitely studying this stuff, trying to figure out how to integrate it, or more likely, how to control and regulate it within their existing power structure.
Okay, so pulling all these threads together, it's a complex web. Internal code fights, Wall Street playing its game, stablecoin wars, nations making strategic moves. It's a lot.
It really is. And it all underscores Simon Dixon's core message. The path forward is through peaceful resistance, through conscious choices. Understanding these interconnected battles is step one for your own financial sovereignty.
Recognizing what the traditional powers are doing, and then actively choosing to opt out where you can, aiming for genuine self-ownership.
His advice is pretty direct, isn't it?
Yeah. Boycott the Fed with Bitcoin. Boycott BlackRock by holding your own assets. Boycott the banks by trying to get debt-free. Boycott big global corporations. Spend locally.
And crucially, Keep accumulating Bitcoin, learn self-custody, really commit to learning it, and maybe even run your own node to support the network.
And there are great resources for that. We highlighted Simon Dixon's own guide to self-custody, and Andreas Antonopoulos has that excellent free course on setting up hardware wallets securely.
They're out there, the tools to empower yourself.
So maybe the final thought to leave everyone with is this. Finance is clearly becoming a battleground for control. In that landscape, what role will you choose? How will you secure your financial future and defend decentralization?
Because your choices matter. How you buy Bitcoin, how you hold it, how you interact with the old system or choose not to, it all adds up. Collectively, we shape what comes next for money. The power, ultimately, is with you.